Over the past year, the S&P 500 VOO has reached all-time highs, and most ETFs are at their all-time highs as well. Which means that you might not be getting the best bang for your buck when you go to invest your money in ETFs in the stock market. This signals the most common question I get asked all the time, and that is, when is the best time to buy ETFs? Now in this video, I'm going to be revealing the truth of that question, whether you are a broad market, dividend, or even a growth ETF investor. This will apply to everyone. And I'll even reveal my buying process since I have over $16,000 in cash waiting to be deployed in the stock market. Now this cash is still paying me interest every single month, but that's besides the point. Now without further ado, let's get started. When is the best time to buy ETFs? Now I firmly believe that time in the market always beats timing the market. With ETFs at all-time highs, some investors might wait for the next big stock market crash to invest in ETFs, because stocks will be at heavily discounted prices compared to today's all-time high prices. But in reality, timing the market is impossible, because no one, and I mean no one, has the knowledge of exactly when the next stock market crash is going to happen, let alone can even accurately predict if an ETF is going to go up or down in value. In 2020, during the latest stock market crash, in reality, no one knew when the bottom was going to happen. And even those who are waiting patiently for the next big dip like in 2020 are left with little, maybe even negative or no gains, because the market has been absolutely pumping ever since. But those who continue to invest in the market, or even dollar cost average or DCA, which means that you buy ETFs regardless of the share price, are up hundreds if not thousands of dollars because they continue to invest in the market and weren't waiting for the next big dip or the next big red day to happen, because they just continue to invest in their ETF portfolio. Versus those who are waiting on the sidelines for the perfect opportunity to invest ETFs are left with nothing while their money is getting literally eaten up by inflation. A recent study says that missing the market's best days has been very costly, and this is for those waiting on the sidelines, while those are actually investing their money every single week or every single month into the stock market. Hartford Funds says that if you invested $10,000 from 1994 to 2023, those who were fully invested in the market saw the highest gains in their portfolio, versus those who missed the stock market's 10 best days saw 54% less money overall, and those who even missed 20 or even 30 of the market's best days saw 73% to 83% less money in their portfolio compared to those who were smart and actually kept their money in the stock market and were just dollar cost averaging. Talk about losing money. Now, if you even invested in the market at all-time highs, you would actually have way more money than Joe Schmo waiting for the next big dip or even the next big red day to happen. Even at all-time highs, I would still say to continue to buy your ETFs and invest in your ETF portfolio, because I know I am. Bloomberg says that since 1950, the broad US equity market has set over 1,250 all-time highs, and that's an average of over 16 every single year. Even in the 2020s, which we are currently in, the market has hit all-time highs 104 times. Now, I know what you might be thinking, what does that even mean for investors? Well, it means that all-time highs aren't as meaningful as some might think. Where if the market hits an all-time high, usually it will hit it again and again and again. So honestly, it's way better to just dollar cost average and just buy and buy and buy your ETFs and not wait for the best opportunity or the best stock price, because this will generate strong long-term returns for investors. And as long as you stay invested and stay the course and buy in stock market crashes, all-time highs, and just ignore the noise, because there's going to be bad news, high inflation, high interest rates, geopolitics, all these different things, just continue to stay the course and buy, and over time the market will go up and up and up. If you believe in the US stock market or even international stocks, you will make a ton of money. So a quick recap, because honestly that was probably a lot of information I threw out at you. Now I have over $16,000 in buying power to deploy into my ETFs, and I'm going to be giving you a quick rundown of my investing process and investing rules to invest in my ETFs. Rule number 1, buy regardless of what the stock price is for ETFs. Buy during green days, buy during red days, and just buy, because the more money you have invested in the stock market and the longer you are invested, the higher your return will be. Now, please don't be the guy or gal that's going to be waiting for the next QQQ 1999 tech bubble to burst to invest in your ETFs. Rule number 2, always have some money on the sidelines, preferably in a high yield savings account or a money market fund. Because the $16,000 I have in cash is actually in a money market fund with Vanguard, the ticker is going to be VMFXX, and this pays me over 5% in interest on my cash, and this is paid out every single month. Because let's say hypothetically there is a big crash one day, or we are in a bear market. I want you to have some sort of money on the sidelines, because yes, we're going to be dollar cost averaging in our ETFs, but when the market's going to be dipping a good amount, I want you to go heavier in your ETFs and deploy more money, because over time, let's say the market's right here, it will go up and up and up, right? And you will have a higher return than if you just invested the same amount of money that you always do, then deployed more money. Rule number 3, reinvest your dividends. Now, this should be a no-brainer, but if you reinvest your dividends, most likely your next dividend payment will be more than the previous one. You'll also have more shares, so hypothetically, you should have a higher return in the long run and increase the compounding effect of your ETF portfolio. Rule number 4, dollar cost average or DCA on a schedule that works for you. I don't care if you dollar cost average every single day, weekly, bi-weekly, monthly, or even yearly, or even if you lump sum your money, just get that money invested in the stock market. Usually I buy my ETFs every single week, and I usually buy 2 to 3 days of that week with the same $500 to $1,000 to deploy into my ETF portfolio. And shout out to my YouTube membership group members who get to see my portfolio and buys happen in lifetime. Thank you so much for supporting the channel. Link is in the description and in the comment section of this video if you are interested in joining as well. So with all this in mind, this is exactly how I will invest $16,000 in my ETFs, and it looks like this. And guess what? Let's say the market is going to be up higher for many decades to come in the future. The prices right now, let's say VU at $500 is going to be super high right now, but in many different decades, what if VU is at $1,000 a share? I don't know. You're going to be really regretting not buying your ETFs right now in the future when you look back at today's prices. And if the market goes down, I really don't care. I will go in and I would love to buy ETFs at discounted prices, because that's my strategy. Buying whether it's up or down, I will always be a buyer. Now, if you guys like this video, please give it a like, because this Q puppy did. And right here is going to be an ETF portfolio that I personally follow. And right here is going to be my most recent video on the best one ETF portfolio ideas. So go ahead and check those videos out. Now, I love you guys so much. I hope you guys have a great day and continue to crush it in the stock market. And take it easy. Peace.